Hello everyone, welcome to the 14th of our ACCA P7 Advanced Audit and Assurance lecture recaps. This one was on reporting. So the structure of the audit report under ISA 700. First thing we've got to have is a title and addressee, i.e. what is it and who is it to. That clarifies the purpose of the audit report. We'll have an introductory paragraph that's going to state what's covered by the audit, i.e. the balance sheet, the income statement, cash flow statement and the accounting policies. It'll also set out then next of all the management responsibilities for controls, for preparing the financial statements, for selecting the accounting policies and for those accounting estimates. All of this is to clarify exactly what the purpose of the audit report is. It'll also set out the auditor responsibilities. Remember that that's to express an opinion, to use the ISAs, to provide reasonable assurance, and the procedures that were used to gather evidence and to undertake a risk assessment. So all of these things are going to be included in the audit report. In between the responsibilities and the opinion then, any modification will come. So if the report is modified in any way, it'll come before the audit opinion. If the report is modified, you must give a very clear description of what the modification it is and why. That will include all substantive reasons. It will also estimate the financial effect on the financial statements, i.e. if something's been left out, well then you've got to state what effect that has had on the financial statements. That has got to be detailed, and it's got to show how the profit and loss and the balance sheet have been affected by the misstatement. We then will state our opinion, and then any other reporting responsibilities. If we have responsibilities such as legal responsibilities or regulatory responsibilities, or if the consistency of the director's report has to be mentioned, well then we'll do this after the audit opinion. Lastly, there'll be a signature, the date and the address of the auditors. So the opinion itself then, well there's two ways it can be. It can be modified or unmodified. Modified, first of all, that is that the financial statements present a true and fair view and are prepared in accordance with the framework and applicable legislation. A modified opinion then, this again can be split down. Firstly, qualified opinions. It can be qualified in that there are material misstatements in the financial statements. Okay, this is a new way to say disagreement. Okay, material misstatements in the financial statements used to be said to be a disagreement, but the Clarity Project has changed things around a bit, and now it is material misstatements in the financial statements. So, a material misstatement will lead to an except for paragraph. However, if it's material and pervasive, i.e. it's material and it means so much that the rest of the accounts are rendered meaningless, well then we will give an adverse opinion. So if the material matter is material but not pervasive, we'll put an except for paragraph in. If it's material and pervasive, we'll issue an adverse opinion, i.e. not a true and fair view. The second type of qualified opinion is that the auditor is unable to obtain sufficient appropriate evidence. Again, the Clarity Project has changed that statement. It used to be a limitation of scope. So instead of a limitation of scope, it is now that the auditor is unable to obtain sufficient appropriate evidence. So again, if this is material, you'll include an except for paragraph in your report. But if it's material and pervasive, we'll issue what's called a disclaimer of opinion. All a disclaimer of opinion means is you can't form an opinion because there's not enough information for you to do so. So you're disclaiming yourself from making an opinion. There are a couple of other matters. We have mentioned emphasis of matter paragraph. So as I say, it's an emphasis of matter paragraph. It's included after the opinion or in the opinion. It will be a modification, but it's not an adverse opinion. What it's really used for is significant uncertainties and going concern. So if you're not sure over something, or if there's a going concern issue that leads to significant uncertainty, you'll have an emphasis of matter paragraph. It's not really to be used otherwise. Other matters are the implications of IFRS on reporting. Well, in the UK we can use UK GAAP or IFRS, so bear that in mind. And the implications of this are that financial instruments will be treated slightly differently, as will distributable reserves. Business combinations have also got slightly different treatments. On to a special purpose audit. A special purpose audit will be, for example, summarised financial statements. If you're auditing summarised financial statements, what you've got to check is that these are consistent with the accounts. So if they're summarised, they must be consistent with the full accounts, and that the director's report must be consistent also. They also have to comply with the statutory requirements, but you don't actually issue an opinion on the summarised financial statements. What you do is you refer to the full financial statements opinion. Another example is abridged financial statements. For example, these will be for small to medium enterprises. Those exempt from audit can issue abridged financial statements. What this report does is confirms their entitlement to produce those, and that they have been properly prepared. This report is signed like an audit report. And that was our lecture on reporting.